Hey guys, this is a market update. All of the data is right there in front of our eyes for the rest of this cycle, and it all looks insanely good. It shows us that the massive inflection that we usually get in the last year of a bull market is right in front of us. However, there is this massive lingering uncertainty that I have around what's happening in the world right now. There are massive negotiations happening geopolitically between US, Russia, China. The US wants to cut huge amounts of its budget. It needs to, but that is going to create massive waves of uncertainty, potential disinflation before reaction from the central bank. And that can create huge volatility, especially to the downside if we start getting prints of inflation that come below target. And we're not that far away. And I don't think people are really realize this right now. So I want to talk about that in this video. I think it's an important one. So look, for Bitcoin right now, I can't believe we're still at 97,000. We are just literally just consolidating in another kind of choppy range that we've had 3 or 4 times this cycle. This one here, this one. You can see that this is bullish price action, to be honest. It shows that, we're just stepping up, finding sellers at different prices. But look, I don't think it's about TA right now. I think it's much bigger than that. It's about this cycle playing out and the negotiations that are happening. And that is uncertain. But things look pretty good for the chart. You can see here, it's just another consolidation, right? This is the weekly chart. We're just in this, and we're going to be in this for a while, I think, because these negotiations are really, really important. And that's the next bit of news that could maybe push markets again if they resolve positively. If you trade, check out Bybit. You can get a deposit bonus up to 30K in the description. If you can't trade on Bybit, check out Blowfin. They give a 10% deposit bonus as well, down in the description. Firstly, I want to focus on some data that I'll be looking at for the rest of this cycle. Just the normal types of things that you'd look at for a Bitcoin cycle. Bitcoin, we price it in dollars, which is a debt instrument. Therefore, we really need to be looking at debt cycles. And debt cycles create the economic cycle. As central banks become dovish, drop rates, stimulate the economy, that creates the incentive of credit creation from banks, drives money into the economy, pushes prices up. If central banks want to pull that out, they can do, and that creates a slowdown. Right here, this is high yield credit. You can very clearly see as we get bull markets and bear markets, these match up very, very closely with BTC. You can see we're very, very early in this credit cycle and potentially can go a lot further, right? I don't think we've seen anything yet of this cycle, right? The biggest moves tend to come in the last year, which is 2025. So this is in China. This is the balance sheet of the People's Bank of China, inverted 10-year bond yields, right? So they're very, very closely correlated, and you can see what's happening here. China needs to stimulate big time, right? Because they're in a recession where inflation is basically zero, right? That's not good for an economy that's supposed to be growing faster than the rest. So they need to stimulate big time. Okay, so stimulus there, what does that mean? I know they have a closed capital account, but it does flow throughout the world, and it creates pressure on asset prices upwards as currencies debase. By the way, they pegged their currency pretty much to the US dollar, which is why they're negotiating right now. They need to stimulate big time, but they can't drop their currency too much, right? Otherwise, you just get a spiral downwards, and then everyone else gets upset, and hence why we're having all this uncertainty, right? China home prices, they need to stimulate massively. Europe, half of it is basically in a recession, very, very, very low, inflation metrics. They need to stimulate. The US, not too far off. But as we can see here, this is the ISM PMIs, right? Purchasing Managers Index. Look, this shows economic cycles. Okay, so in blue right here, what we have is the big recession that we had with the last bear market, and now we're picking up again. But we're not peaking out for the ISM. Right, up here, that's when you've got to start to get bearish. If Bitcoin's at a massive all-time high, everyone's excited, that's when you start to get bearish. Right now, it's just time to grind out, maybe mid-cycle for sure, but there's an inflection to the upside that could happen before I start to get bearish. The one thing I'm really uncertain of, I don't know if it's going to affect us this cycle or not, is the extent to which the Trump admin is going to cut spending and cut the government, right? Because they seem hell-bent on doing this. Doge is making inroads, right? It's small so far, but they're going to keep going and keep going. They want to make more and more people redundant. Make no mistake, the biggest employer in the economy in the US is the government. Without the government, GDP and inflation would be negative. GDP and inflation do not track the real economy. They track stimulus. And GDP and inflation must remain positive because the entire financial system is debt-based. So you have debt taken out on assets. The assets fall in price, the debt becomes unpayable. So that is why they require GDP and inflation to be positive, and the government is the sole reason why that is positive. The deficit is 840 billion. That's bigger than income taxes, right? So there's an issue here, is that there's way too much deficit spending, but that's creating positive GDP and inflation. And if you cut that out, then that all goes negative. GDP and inflation go negative, recession. Everyone gets scared and the whole market sells off. Everyone sells for cash because they need to pay their mortgage. You get a massive drop in markets, like huge. That is the worry. I don't know if it's going to happen this cycle right now, if it's going to say, look, there's going to be a big recession, or it's going to be the next bear market. I think for this cycle, actually, things still look pretty good, right? Because if we actually get some cuts from the government side, then they're going to cut income taxes as well, right? That's what Trump wants to do. How much of this is going to get through? What's the extent to which they can cut taxes? I don't know. So that's the uncertainty. If you cut spending, you have to cut income taxes, because income taxes are actually just cancelling money. They spend the money first through debt creation, and then to make sure that the inflation isn't too high from that, they tax you to cancel the money back out again, right? And so they basically want to control this thing of being around 2%. Biden just spent way too much, which is why it went so high. Pandemic spending as well, right? So they have to cut this. They have to cut taxes. But this isn't just a nice linear relationship where you get a drawdown of the government and everything's fine. Usually pretty hectic. And so you can get periods in markets where you see negative prints of inflation and GDP coming down, the market gets massively scared, then you get this big reaction from the government and maybe the central bank. All of that has to play out. And that could be the next bear market where you get the drawdown first, and then, the Fed's still at 4.5% rates doing QT. And these guys are saying, we are going to cut spending, which means we're going to cut the stimulus. And you have 4.5% rates, QT happening, and potentially cutting of spending, which means the stimulus in the economy that generates GDP and inflation is not there anymore. This is important because this is the factor, the determining factor of what inflation and GDP is, this deficit and what they're spending. They want to cut this. So they have to cut income taxes. They have to create inflation through private credit creation and incentivizing manufacturing and anything else back into the States. They have to do that. But it's not going to be a perfect linear relationship of the two, is it? And so there's going to be big uncertainty here. I don't know how it's going to work out. But look, I've got some trades on. Very, 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 very low leverage, because we could easily get 30, 40, 50% drop as some of these figures come out before the central bank starts to catch up and everything. And again, I don't know if it's going to happen this cycle, right? If we just get a great cycle where the market's really bullish, China and Russia and the US negotiate and everyone's feeling good about themselves, and then you get a drawdown. I don't know where it's going to happen. That uncertainty is bigger in my mind now. Back when we were, trading at 15K, whatever it was, right? It was just very, very easy to say, look, just 100% bullish here, right? Great prices, low in relation to the cycle. Now we're getting higher in the cycle, right? Now we're at 100K. It's not a cheap price. It's not just like buy everything. We're at 20K. It's ridiculously low. We're at 100K now, and you're starting to get the risk rewards starting not to get too great, and then these dangers. Now, again, I think this cycle still has a long way to go and play out, so I'm still long, right? But I just have this in the back of my mind, which, again, I don't know if it's going to happen now, in 18 months' time, as the data feeds through, what's going to happen. They want to cut huge swathes of the government and make people redundant as well, right? So next recession, I don't know. They want to cut Pentagon spending. They want to cut the military budget by 50%. This is the national defense budget. You're cutting all this spending. Cutting spending, cutting GDP, cutting inflation, going to be zero. You have to cut income taxes. Absolutely have to cut income taxes. And you have to incentivize private credit creation. This is extremely uncertain. And so we're trading at 97, maybe ignoring all of this for now. Maybe the rest of the cycle, pumps up a little bit. We could get some cutting in spending. We could get, resolution to all the conflict around the world. That drops inflation expectations. Fed gets a bit easier, we have another great bull market. If we're at 200K, 250K, you start to have to wonder what is left in the cycle to actually, get out of the cycle in terms of being long or remaining long. I just want to highlight this because it's a massive uncertainty that's growing in my mind. To be honest, I think we're actually in a good position if you look at inflation rates as well. So the business cycle, as I showed you, is starting to tick up, right? It's not overdone. And then you've got inflation right here starting to come down, right? And actually, I think the bond market's way too hawkish. The bond market pushed out rate cuts, right? Like to the end of this year, it's basically like one rate cut this year. I think there's going to be more than that. This is trueflation right here, which is a good indicator of bond yields. Bond yields are mispriced, right? If we look at trueflation, too hawkish. They pushed out the rate cuts. The Fed's still doing QT, still way too high. I think they need to be potentially cutting. If we get conflict resolution, right? If we get some cuts from government, maybe that feeds in. Maybe it will feed in too late. I don't know. But if the bond market reprices here, we could easily see asset prices push up again. So I think this is good news, to be honest. If we look at core PCE, right, 2.6%, headline 2.4%, this is what the Fed focuses on for their 2% target. It's not that far away. This is in the US, right? It's 0 in China, right? It's coming way down in Europe. They need to stimulate. If the US is anywhere around 2% and you get this negotiation, then you get the rest of this bull market is absolutely insane. And I think that will happen. But how far does it go with this cutting? Military spending cut, right? They want to cut so much here. They have to cut income taxes. They have to create credit creation as well, which they're trying to do, to be fair. But I can see that during this bull market, as we move higher, over-leveraged players like the MicroStrategy playbook, many people copying them now, that is the next bear market where you get potentially high unemployment, huge reduction in GDP and inflation. You know, the market is over-leveraged, and that is a potential. So, look, positive, but that is worry. This worry of uncertainty is definitely in my head. This post from Zero Hedge pretty much sums it up as well. Look, here's the bigger play. You cut enough spending, even if it's all grift and fraud, you eventually get a recession because the government spending is the responsible factor for inflation and GDP. So if you cut all that out, you eventually get a reduction in those, which everyone calls a recession, right? And they never let that happen because the debt system is priced upon the asset, so you have to have the assets keep going higher. It's not a tech company. That's the thing I'm worried about. But for right now, if we do get this inflation coming down, which looks like it is, and the business cycle picking up, which looks like it is, that's a bull market for BTC. So look, still very positive for this cycle, but there's that worry. And as prices go higher and higher, the risk reward for this cycle starts to get less. But something to keep in the back of our minds, maybe worry about in 6 to 8 months' time. If you do trade, Bybit deposit bonus down below and Blowfin deposit bonus down below as well, up to 10% deposit bonus. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.